In midday and midweek trade, the major U.S. stock averages are inching closer to the flat line. Joining me today is Tim Anderson of TJM Investments. Tim, good afternoon, and thanks for joining me.
Nice to be with you.
Well, first and foremost, we're seeing the equity averages clamber back to the flat line. We started out in the red, but now we are inching close to flat. Now, given everything that's happening on the fundamental and technical front, what do you make of this week's action?
You know, the market's developing a little bit of a pattern where you have very strong up days, maybe one or two of them, followed by two or three consolidation days where the market does very little or maybe pulls back a little bit. Now, you've also got a little bit of a disconnect where you have some commodities that typically reflect inflationary pressures rallying. Copper's up 2%. Gold is a little bit higher. It's through the 1220 resistance level. But bonds are also rallying, and the yield is down a little bit. And there's chatter about how from some people that the bond yields might be heading back toward 2% and the reflation trade might be over, which really isn't consistent with what we're seeing in the commodities. So I think that equity investors are, kind of trying to process all of that. Utilities have had a pretty strong move up off their lows in early January. And you still have some sectors that show some very strong relative strength, hopeful to get a further spark from however the Trump economic plan develops.
And we have a lot to process in terms of fundamentals, but for now, in terms of that tug-of-war between the bulls and the bears, it does seem like the bulls are winning. But given all the risk and volatility on this side of the Atlantic as well as overseas ahead of presidential elections, how are you assessing the situation?
Well, I think the bulls are winning, but I think they're also frustrated. Maybe not as frustrated as the bears, but because you have these strong moves where you have new highs on multiple indices with no follow through the next day. But that being said, the technical underpinnings of the market are very strong. Consider that on a weekly close, you've had all-time highs on the S&P 500 and NASDAQ 2 weeks in a row. On a weekly basis, that's a very bullish longer-term indicator. And you had a weekly close on the Dow at an all-time high 2 weeks ago. Didn't quite duplicate it last Friday. So it's not. We're certainly not in a state of euphoria, despite the fact that some valuation issues have started to creep into the chatter about the market a little bit. Or maybe 2021 versus trailing S&P earnings, and depending on what you think earnings are going to be this year, maybe that's 18 or 19. So I think that investors are trying to be cautious, realizing that the trend seems to be up, and they don't want to miss it and fall behind if the market really starts to gather steam.